And we turn our attention over to Jenny Horne, who's taking a look here at Micron after its latest report. Kevin did a brief mention. Some of your thoughts.
So Micron, I mean, this was a definitely better than expected report. And I think that signaling we're hopefully seeing the eventual recovery and return of their just overall the enthusiasm related to the high bandwidth memory market, or of course DRAM as it's otherwise known. So Micron right now does build the memory chips that are capable of these high processing like data entry points for AI. So if we've seen its memory chip, market definitely see demand, but unfortunately they couldn't keep up with that demand. And so then they had some major supply chain snags over the last several years. But based right now on just overall like elevating their PC performance, unveiling these various new technologies, while also highlighting NAND as well as, these further developments with their supply chain. All that being said, this has been a really nice recovery, and I think this report signals that it's actually translating into the fundamental story here. Its gains have been outpacing right now the so-called Mag 7, of course, and we've seen this renewed confidence really come back with the overall market and benefited names like Micron. So a name that's risen almost 50% this year, even this is excluding this morning's move to the upside. Clean beat across the board. We saw revenue surge almost 30% from a year ago. So big numbers for a company as large as Micron. And also we continue to see this higher expectation now moving forward. They gave now guidance for earnings and revenue now for this coming quarter and this year far beyond previous expectations. And all this to be said, I always appreciate a turnaround story, but also I appreciate an earnings story that shows this turnaround. And I think that's really what this report demonstrates. Memory chips have never necessarily waned in demand, and they operate about 20% of that market, but they have not been able to get ahead of it with the supply and demand, and it seems like hopefully we're starting to be there.
Yeah, absolutely. Look, what we've seen with Nvidia, what we've seen with tech, not surprised to see some nice numbers from Micron and the guidance above the estimates, and a nice move up 1.5%. That will help to push things to at least some new highs on Wall Street, like Nvidia, which had a record close yesterday. A final thought here in that group.
So, regarding this space, it never made full sense to me why we saw such a repricing. I know DeepSeek was maybe the first thorn somewhat in this narrative, but then you think about the ways that export controls were expected. That was something we talked about under even the Biden administration. And then also in regards to some of the trade tariff uncertainty, it never was set to impact these companies like to the extent as say raw materials or like clothing. So I never understood why we saw such a degree of pressure on the space. But to see now the entire tech space has been an outperformer as of late, this nice recovery, I think, shows the appetite for these names, and also that right now that many are willing to say, hey, maybe this didn't make sense that we saw such a repricing to the downside, and that momentum has benefited, everything right now within tech, especially relating to AI.
All right. And next up, let's take a look here at Apple this morning, and some nice calls also from JPMorgan.
Yeah, so Apple's story has been a bit different. I know that they've also seen a pretty nice recovery, but it hasn't felt to the same extent as the rest of the Mag 7, frankly. So with some analyst news today from JPMorgan, which did keep its overweight rating, so by no means was this super downbeat, but they did reduce their price target ever so slightly to $230 from $240 a share, updating their Apple revenue and earnings forecasts now to reflect some of the near-term pull forward demand for the iPhones, driven by what they said was a moderation of demand drivers in at least the back half of this year. They did say that they're right now expecting more of this demand to moderate for their iPhone 17 series, as well as this modest suggestion of right now the pull forward in demand given these purchases right now of the tariff-led price increases. So basically, they're believing that these volumes for the iPhone 17 could be stronger than what we saw, at least as far as the previous model. But right now there's the feeling of maybe people are going out and buying iPhones because you are viewing it as a value. Even if necessarily we don't see tariff pricing impact the 17 model, there's this right now rush thinking of let's make purchases now before things get more expensive. So that's what they were highlighting. But they also did say that they believe Apple's near-term demand drivers do remain robust, again, as a result of that pull forward, as well as the support from some of its subsidies in China. So Apple has lost a bit of its luster given its, I think, like lack of development and innovation in the AI world. But that doesn't mean also that we can't see things come back. We know that Apple's main catalyst last year was WWDC, and then things took off. So things can always reverse as quickly as they've somewhat fallen. But it's going to be, I think, still a show me story for Apple, and being able to show that they are a competitor and a strong one of that in the AI space.
All right. Jenny, it's great to see you. Any final quick thoughts about possibly seeing a record high today for the S&P 500?
I know, I'm hoping for it because right now it looks like we are still standing strong. Although yesterday, I will say, we started off the session on your show with things, like rallying. And then by the time we got to the noon hour for my show, things were a bit more downbeat. So I'm hoping for today's, at least this momentum to hold throughout the session. But I can't complain with Nvidia at all-time highs, $3.8 trillion in market cap now.
All right. Jenny Horne, great to see you. Thank you so much.